Hello and welcome to World Insight. I'm Tian Wei in Beijing. The International Monetary Fund on Tuesday released its new World Economic Outlook, forecasting the global economy to shrink by 4.4% in the year 2020. It predicts a Chinese growth of 1.9%, the only major economy in positive territory. The IMF's projection assumes that social distancing due to the pandemic will continue well into 2021. IMF Managing Director Kristalina Georgieva says the international community must do more to ease the pandemic's economic blow. So where's the road to recovery? With the threat of a likely second wave of infections, more rough sailing ahead for a better world economy? Let's talk to our panelists and our conversation starting from the Chinese economy. For Global Economy Outlook, we are joined in New York, Max Wolf, Managing Partner at Multivariate. In Hong Kong, Hong Hao, Managing Director and Head of Research at Volcom International. In Shanghai, Xu Sitao, Chief Economist from Deloitte, China. Gentlemen, what a pleasure. Good morning and good evening to all of you. I want to start by asking a China-related question. Mr. Xu and Mr. Hong, Shenzhen is celebrating its 40th anniversary. Now, Shenzhen, from a small fishing village to where it is today, a metropolitan, pride of its economic development, financial sector, and certainly the high-tech sector, it has been such a transformation. What kind of takeaways do you think Shenzhen could provide China at this very important and yet challenging time when it comes to the economy? Mr. Hong, you want to go first? You're in Hong Kong, not far actually at all from Shenzhen.
Yeah, well, it's across the river from Hong Kong, yes. And I think in the past 40 years since the reform opened, I think in part due to the policy support and also in part because of the diligence and the smartness of the Shenzhen people. And I should emphasize that most of them are actually migrants from other provinces. They create a growth miracle. So now I think Shenzhen is a tech innovation center. And also in the most recent policy announcement for the future growth plan for the city, we can see that the plan is really elevating Shenzhen's status as the center of the Greater Bay Area. And I think in terms of capital market access, also in terms of technology innovation and many other important growth areas, I think Shenzhen is getting further policy support from the central government. So I wouldn't be surprised to see continuing and even accelerating growth trajectory from here.
Further policy support, Mr. Xu, many believe that was very important at the very beginning of the Shenzhen Special Economic Zone, but then people also believe that the innovative spirit as well as hard-working spirit from the grassroots level up approach is really the key. Mr. Xu, your takeaways about Shenzhen and its inspiration for today's economy in China.
Tian Wei, I think you made a very good point. This fighting spirit, innovation, can-do attitude. Not only Shenzhen has a population almost 10 million. It's the youngest population in China. I believe the median age of Shenzhen residents is less than 30. It has many leading tech companies. In the medium term to the long run, Shenzhen could combine Hong Kong, creating China's NASDAQ and the New York Stock Exchange. Of course, also as Hong has alluded, Shenzhen is in the leading position of driving Greater Bay Area, so bringing Hong Kong, Guangzhou, and other major cities to really form China's Silicon Valley and really like China's Tokyo Bay.
Mr. Wolf, I know you know China very well. You've been following China's economic growth and development over the decade. Tell me more about your take on Shenzhen and what lessons and experiences it could provide to China at this point?
So I think that the developmental program of China has been a story of managed explosive entrepreneurial growth. And where you see the great successes, it's when you have a government that can kind of manage and produce incentives and help with these periodic and somewhat severe downturns in the global economy. Even if they started somewhere else, when they wash up on your shore, they can derail plans. So to me, the attention comes to the explosive growth of China. So many people, many countries around the world have had explosive periods of growth, but very, very few have been able to maintain social order, national unity, and maintain growth over decade after decade after decade, after challenge after challenge after challenge, whether it's a financial crisis or a global pandemic. To be able to manage growth and to be able to manage social dynamics through that is truly what separates the greatest economic success stories from a good few years, which many countries have, right? So very impressed by that. And I'm excited to live through a moment which is a bit painful sometimes for America, but interesting, which is I think we're seeing, especially in the COVID challenge, the passing of the global torch away from the US, which sadly has mismanaged the crisis probably more than any other single leading nation, and to China, which is going to have had the hardest time in some ways because they had to do everything first, and to have actually done a pretty darn good job of it, right? So as an American, I'm open-minded enough and interested enough in the facts of the situation to pay attention to what's happening. And I have a sense that for my children and my grandchildren, they'll live in a world slightly different from mine.
About the latest, let's go to some of the numbers with the IMF report, as we reported earlier. So, Mr. Wolf, without the growth of the rest of the world, how would the Chinese economy be able to function as much as many people wish?
Yeah, so it's a great question. I don't know if I can do an answer as good as the question, but look, the modern economy, the modern global economy is a system of very, very delicate interdependencies. There is no doubt about it. The world today is that your neighbor, the most important neighbor in your economic life, can be someone you can't imagine, you'll never see, who lives 8,000 miles away. I do think that China's been involved in a slower pivot toward more consumption-driven internal focus in its economic growth. And I think the challenge of this moment is to accelerate that without becoming nationalistic and withdrawn from the global economy.
Mr. Hong, your take about China, how would its economy function? Well, the rest of the world, according to the IMF report, is very much likely to suffer from a setback in terms of numbers, very clear.
Yeah, well, I think in the first half, understandably, the Chinese economy, as well as the rest of the world, has been hit by the outbreak. So, it's not surprising to see a very slow first half of this year. But then going into third quarter, we see a meaningful recovery, especially in the industrial sectors and also in the upstream commodity sectors. They're all starting to come back. And I think the momentum could accelerate going into the fourth quarter. But then, once again, going into the next year, during the Chinese New Year, then seasonally it's going to be weak again. So I think sequentially we're seeing growth momentum coming back. And I wouldn't be surprised to see Chinese GDP growth at above 2% for this year, which is higher than the initial estimate by the IMF. I think going into the next year, because of a very low base effect for the first half of next year, Chinese growth, as well as the rest of the world, can be quite strong in terms of number. But then I think it really depends on how well we manage the virus, and also how much progress we can make in terms of developing a vaccine, for the growth momentum to continue for China and for the rest of the world.
There are certainly, as you said, Mr. Hong, a lot of moving factors, vaccines and the containment and also the rest of the world. Mr. Xu, tell me about your thoughts on this, and 2% possibly good, but still is so far away from the earlier target of 6%. Of course, that was set before the pandemic, but that ensures huge numbers of employment, particularly for the young people, social stability, a key factor in China.
Right. So my number for the year actually is around 2.5%. That's considered quite optimistic, essentially assuming both third quarter growth, which should be out the next few days, and the fourth quarter will be between 6 to 7%. So that's a quite remarkable recovery. But the latest number, September particularly, almost 10%, suggesting global demand is broadening out. So I'm a little bit more sanguine than IMF report. But of course, what China has to do, as Mr. Wolf has said, really just putting more emphasis on social welfare, domestic demand. Well, at the same time, China could play a quite important role in helping some of this debt reliefs, really which plaguing many developing countries and low-income countries. So I think next year will be a much better year.
Mr. Wolf, China-U.S., U.S. cross-Atlantic relations, U.S. is allies with the rest of the world, and China's relations and its image in the rest of the world, all of these are combining and moving all the time, having an impact on the economic cooperation spirit and global governance. Your take, how will these moving factors, in a way, eventually settle down when it comes to its link with the economy?
I think it's a little bit hard to know the trajectory before November here. Obviously, I think it's a poorly kept secret that we have a closely contested election, that all the polls have suggested a change at the senior levels here in terms of the presidency and possibly control of the Senate. Were that to occur, I think the outlook will be somewhat different than if we have the same regime again. I think that possibly also quite disruptive to the global economy is it's very plausible that we have a 2-week or greater period here in which we have two people saying that they may have won, and we don't have consensus as to who the next president is. Obviously, we have a period, so the takeover doesn't actually occur until the 3rd week of January, so not right away in November, but I think it'll be very destabilizing to global financial markets and expectations if we have a protracted period of uncertainty with possibly even some social unrest around it here. I think that's just very destabilizing and becomes very difficult also sitting now trying to look at what the world looks like when you're not quite sure kind of how that goes. That being said, I think there are reasonable prospects for at least the beginning of the return of the U.S. to the global order. So my expectation is that the United States isn't in a position to return to the fold in terms of performance for at least another 6 to 12 months. And I can only hope that we begin to better our performance and rejoin the community of nations as fully and as fast as possible. But I think it's hard to judge that likelihood prior to the election here.
The more economic growth we have seen encouraged by government policies, particularly for the short term, the more likely we are going to see wealth gap getting wider. And we have seen already that coming from the very beginning of the pandemic until today. Mr. Hong, what about that? The economic growth rate vis-a-vis societal equity, are we getting ever farther from apart from between the two?
Income distribution and also wealth disparity is growing larger, not just for the U.S. I think for the rest of the world, even to a certain extent in China, it's also true. And I think that is because of the ownership of financial assets varies between the rich and the poor. I think you use the U.S. data as an example, right? So I think more than 60% of the U.S. equity, well, I think much higher percentage of the U.S. equity is owned by the rich. So even though the financial market is rallying, it seems to be recovering well. I think the real economy, especially the service economy and also the smaller part of the economy, they are still struggling. So I think for many of the countries, they can say more or less the same, because of the ownership of financial assets are very different. Therefore, the beneficial effects from central banks' liquidity easing can be very different. So I think the poor still needs government help. So for example, in the U.S., the government is sending out checks, unemployment checks to people to help them to get past this hardship. I think for China, we have targeted loans by the PBOC to the smaller business to help them, survive this difficult period. And I think many other governments are doing the same. So I think it is good to see that governments around the world are taking initiative to firstly help the poor to get over this hardship, and secondly, sort of using regulation, trying to change the income distribution disparity between the rich and the poor. But I think before we can claim any success, what we're seeing right now is that from the data, the disparity is ever more glaring than before.
Yes, indeed. Mr. Xu, how do you think China will handle all of those traps, geopolitically, the Thucydides trap, and now the middle income trap, and also now with the public health issue and leading to the societal economic impacts?
First of all, regardless the outcome of upcoming election in the United States, I do believe China and U.S. will find a new balance. So I'm relatively optimistic. I mean, in the end, these two countries need to learn how to work together on many global issues. It's not in anyone's best interest if we have two tax standards and so on and so forth. On domestic demand, if we believe economic recovery maintains its momentum, which is likely the case in China, then the question is whether we should or will maybe shift the focus more to small and medium-sized and enterprise and the consumers, because the priority so far has been the resumption of business. That has been very effective.
What about the U.S. economy and the dominating role it's still playing, whether it's in the financial sector in terms of the U.S. dollar and also in terms of global governance, IMF, World Bank? Mr. Wolf, how should we understand the U.S. role from now on? Earlier you indicate a bit about that, but I want you to help us to further illustrate about the situation.
One thing I would say is that we've uncovered two early crises which I think need to be fixed. One is about 80% of net job losers appear to be women, forced to sort of assume domestic duties in a way they hadn't been before. And so we've had a very differential impact to the downturn between men and women. We've also had a very differential impact of the downturn by different ethnic groups here. And those are potentially problematic social lines to have stresses applied to them right now for a host of reasons. So for instance, Asian Americans went from having a lower unemployment rate than even white Americans to having one of the highest, one of the largest increases we've seen. So we're going to have to figure out how to have policy interventions here that are larger, more coordinated, and more targeted at areas of trouble, whether that's female employment or some ethnic groups that have very disproportionately borne the brunt of job losses. And by the way, also some of the same ethnic groups have bared a disproportional amount of sickness and loss of life in the downturn as well. So we have, I think it's all very doable, but we have a pretty steep climb ahead of us here.
Finally, before we go, gentlemen, I want to have the three of you briefly touch on the issue of how do you see economic policies will go in terms of direction, mainly about domestic issues and domestic circulations, as we use the word in China, or will it be more balanced between domestic and international agenda?
The policy would be mostly domestic driven because after all, consumption is still lower than the level relative to last year. And also, even though your cyclical sectors are doing well, I think, for the benefit to flow through to consumption and also to the servicing sector, it still takes time. Globally, I think, after we conquer the virus, I think countries will have to refocus on how best to cooperate and rebalance the global relationship together.
There's a prospect. I think the best case scenario, which I'll hold out for, or hope for anyway, is that the United States makes a pretty large pivot toward rejoining the community of nations with a more cooperative outlook at around the same time as the worst of the virus is behind the global community. Those would be very positive forces to push us forward. We're going to have a more flat playing field with more regional powers as opposed to a single global superpower, and we're going to have to organize the transition to that direction while giving each other important support and help for our domestic goals as major leading countries. That's a hard thing to do, but I will remain hopeful.
I think the focus will be largely domestic, because for most economies, I think the word I would tend to use the rest of the year or next year will be rehabilitation. So because coming slowly out of the impact of pandemic, China in a better position, but nevertheless, I think domestic focus remains the key. Again, on China, you began the question with the Shenzhen, so I think that's a good question. In the case of China, I think technology development is very important, and to accelerate financial sector reform, again, related to Shenzhen, registration system, so on and so forth, that's very important. So that's domestic, but that's also will help China more integrated with the global economy.
Thank you so much, the three of you gentlemen. I learned a lot. Max Wolf, Hong Hao, last but not least, Xu Sitao. Really appreciate it. And be safe wherever you are.